Hi there, my name is Juan Guerra, and thank you so much for your interest in this training. Now, if you want to know a little bit more about what we do and see if we can help you, just simply go on my profile and click visit my website. There you can watch a video where I explain you a little bit more about our program, how it works, and then just simply, if you feel that this is something interesting for you and you want to talk more about it, you can book a call by simply clicking here, filling this out, and then scheduling your call. All right, let's go into the training. So basically, you are watching right now the pricing audit training. And the thing that inspired me to do this was that throughout my whole service provider agency owner journey, I struggle a lot with different stages when it comes to pricing, like how much should I charge, what is really something that will make my business sustainable, what is the minimum I need to charge, what are my costs. And then once you start having freelancers, then you need to get them calculated into the whole thing, but you have also something that you want to earn for yourself, and there has been a lot of confusion and many things to figure out along the way. And every time what I did was work a little bit more on this tool. And so I have adapted it a little bit for you to be able to, in a very simple step-by-step process, to be able to determine how much do you want to earn in terms of what you want to take home after taxes, then really understand your business a little bit more in expenses, capacity, and constraints, and then bring in the tax factor so that you know how much does the business have to make, and then work your way backwards from there to estimate, well, according to this, what is really realistic in terms of expenses, what is realistic on delivery. Now, before we go any further, obviously, you have to know that I am not a certified financial planner. Please check all this stuff with your accountants and go through it with them. This is intended just for training purposes, and it's not really exact. And so it's just going to give you a rule of thumb reference that can work as a guide in helping you make more strategic decisions when it comes to your business and in terms, more importantly, about money. And so what you have is a spreadsheet that I have created on Google Sheets, and we have 3 tabs here in the bottom. And the way it works is that we start by defining numbers. And so the goal of this first tab is to really set things in stone and define the things that we want for ourselves. Now, this is designed for agency owners who are really trying to go from owning a job, calculating how much they need to charge, is my pricing really okay, is this really enough to build a healthy business, so that you can have the resources to scale, to grow, and invest in yourself, invest in a team, invest in programs, and so on. And so this will help you also identify what is the biggest bottleneck. Is it capacity? Is it sales? Is it pricing? Is it my cost? And we'll see all that right now. And so if you haven't already made a copy, go ahead and click here, and you can make a copy into your own account. And from there, you can go ahead and start working on it. And so what I recommend you is to watch this training and really do it at the same time. So you can just pause the video and then play with it and then come back and continue. And so first thing that we're going to do is really determine what should our income be that we want to take home. And for me, that was a big thing, because it's easy to say, I want to make 100K a month and I want to take 10K a month and whatever it may be. But we have to be realistic based on where we are. As entrepreneurs, our income is going to be defined by our skills and our mindset. And so if you're making 5K a month, it's going to be really hard that you, within, 2 weeks, are going to be at 50K a month, right? And so there are other elements that need to play here in order to get there. And what this does is allows us to give us an overview of the systems that we need to build. And so the first thing, and I'll keep things simple, let's say that you want to make 10K a month, okay? And so you want to take home $10,000. And if you are in Europe and you want to use euros, all you're going to do is select the cells that are around money. Just go here, format, number, and just go euro. If this doesn't show up here, you can just say custom currency, and then you just look it up here. Okay, Cool. So let's say I want to take home $10,000 a month. Now, the next question that we need to ask is, what is really my capacity? And I think that this is one of the challenges that we have, is because our service business is intangible, especially in the beginning, everything depends on us and we don't really know. But if we were to physically represent this, we need to determine that most likely in the beginning, we have a small restaurant that has maybe 5 chairs, and that is capacity. And that means that if we have a 5 chair restaurant and we want to take $10,000 a month, most likely we're gonna have to increase our prices. And that's the whole thing of having this audit, because chances are is that you're charging too low, and there's no way you're ever gonna make that unless you then increase capacity. But if you don't know that you have a 5 chair restaurant, how can you know this is a bottleneck? And that is the whole purpose of this tool. So if you find this exciting, you can imagine how I feel, because that's exactly what I want to help you with. So let's say that you have capacity for 3 clients. Just an assumption here. And then the next question we need to ask is, well, but how many people can I really sell a month? How many leads am I getting? How many people I'm closing? What is realistic here? Because even if you have a capacity of 5, if you're constrained right now, if you're only selling 2 clients a month, that is your constraint right there. So whatever it is, the lowest here is going to be your constraint. That's going to limit what you can actually make. Then we want to look at taxes, because this is our partner and this is going to help us calculate things in the next place. And so what we want to have a look is, what is really my income tax rate? And from there also, what is my social security rate? So in the place where I live, we can estimate that this is going to be somewhere around a 20%. And the cool thing here is that this is actually a bit inflated, because we're calculating this on the total revenue, and many times taxes are just paid after expenses have been deducted. But anyway, this is how I'm calculating here. So this is a rule of thumb. I'm calculating 35% of everything we make as self-employed for going in that direction. Maybe you are already as a company tax, it's different. So this is going to depend on you, and this is what I say, like, you need to check this with your accountant. Next thing that we want to do is really estimate what are our monthly fixed expenses. So that means your office, your licenses, software, sales navigator, whatever it is that you pay for. You want to enter that here, and let's say that this is going to be €1,000 in my case, just to keep it simple. And last but not least, you work with some freelancers in your projects. You're outsourcing different parts. If you're not, I still want you to calculate this, because at some point that means that capacity is going to be limited because you're doing everything. And if you want to increase capacity, you need to start planning that certain parts of your job are going to be done by somebody else. And so you need to start already pricing your services to have that cushion, so that you have the cash for when you start hiring already and you're used to selling prices. Because the person that buys a $1,000 project is not the same that buys a $10,000 project. And so as you increase your prices, your customer is going to change accordingly. And what you want is to already be there, so you have the cash to start hiring. Otherwise, you'll be stuck forever doing everything by yourself. And if that's what you want, if you want to own a job, that's fine. That's completely okay. So many people are okay with that. But some want to build a business and they just don't realize that they basically charge too little and they will not be able to afford a team. And so the way we're going to know this is we're going to look at the last invoice. And let's say that invoice was $7,000. And then from that, let's say that we spent on freelancers, or it would cost us freelancers, it will be somewhere around $20,000 in total. So that means that from the total revenue from every invoice we send, about 43% is going to go to cover our freelancers. So here what we do is we have an overview and we have established things. What we go from here is, now we move on to the next tab down here, and we go to determine price. And what I have done here is I've taken concepts from the book Profit First. I'm not licensed to teach this. It's just my interpretation and how I adapted this to my situation as an agency owner. And what the book does is what it teaches you is it forces you to start planning profit within your cost structure, because if a business doesn't generate any profit, it's not a business. There's no reason for that business to exist. And so as we transition from owning a job to owning a business, we need to start planning profits and profit targets within our business so that we can start seeing it as a group of systems, and we start separating our self-worth from the process, from the service that we do, but see everything, the whole system as a whole, and seeing, okay, does this system make sense? Is it profitable or not? And so what we did here is that I created, using the concepts of the book, different buckets, right? So we have a profit bucket. We have a bucket for us getting paid our salaries. We have a bucket for allocating money for tax and expenses. Tax and health, like Social Security. And we have a bucket for covering the expenses of the business. And there is sort of like a rule of thumb, especially in service businesses, where you can estimate a profit of 10%, allocating to yourself 20 or 50%. Like, this stuff would change, especially depending on the level of involvement that you have in the business. Like, the more involved you have, technically you have more of a job, and so you get paid with salaries. As you remove yourself and the business grows, you get paid from this, but obviously then the business makes more. And so even though this is less, then, if the business is making 1 million, then that's how it goes. Yeah. Just a second. I need to blow my nose. All right. So basically what we do on this tab is that we're going to determine how much does the company need to make in order for us to take home our target income. And that allows us to define what is the minimum price that we need to charge customers in order to take that money home and run a healthy business. Now, you're going to be amazed. Most of the time, this is going to be higher than you expect. And I think it makes sense because in this case, our capacity is really low. And so we can just not serve that many customers. And therefore, we need to charge more so that the business can run, and we don't worry about money, and then we're not desperate trying to sell to everybody and discounting prices and basically putting ourselves in a situation where we just stay stuck because we're desperate and stressed. And so the way this works is we're going to allocate percentages to each of the buckets so that we can bring this to 100. And then we play around with the monthly revenue that we need to make so that we're able to take our target income home. And we set it up by the biggest constraint, whether it is sales or capacity here that we can have. And that will let us know what is the minimum amount that we need to charge. And that's how we get to audit our pricing based on the different expenses and incomes and targets. And so the way this goes is we determine our tax and health percentage that is going to be allocated to that. And that's already coming from the first tab. And so if you see the first tab here, we have our taxes, right, that we have allocated based on this. And then for some reason you have it correct here, so there you go. And so it is already copied from there, that is defined there. And so this is already allocated. So that means we don't have 100% of the total revenue to play with, because immediately from every dollar that comes in, 35 cents get put on the side. So when we need to go and pay to the IRS, then the money's there. The challenge is that when we specialize our business and we systemize, we start growing, and now we start seeing money in the account. And we start spending that money without realizing that that money needs to be allocated to other things. And that's where we really get into trouble, especially because when we are around 10,000 a month and we grow we don't realize that we actually need to spend more money in taxes and expenses, but we see the money in the bank account and we just go wild and we don't estimate and calculate these things that are coming in later. So that's actually something that from the book helped me out a lot, because it talks about this in the book. And that's a key reason for this. And this allowed me that when the market changed, I was guaranteed 6 months of salary that I had in the bucket, and that allowed me to continue planning and doing things without any problems. It allows me to cover salaries for the team for 6 months without any problems, and it allowed me to have the money ready for when the tax bill came and the social security bill came, and I didn't have to struggle with that. And so this system, it's really, really important that we start playing around with these numbers. And if you want to know more about it, I recommend you to buy the book, or just simply send me out a message as you do this. So we're gonna allocate, and we're gonna start by profit. And so probably this is something that you've never done before. And what we're gonna do is, let's allocate then. Start small, 5%, 1% is already more than I used to have before. And we start right now with the profits. Then we see that now we have allocated 40%, we have 60% left. What we're gonna do here is, let's allocate a 30% to ourselves, and then we have about 30% left to cover our expenses, right? And so we have allocated expenses. What we need to do next is define, we just copy the number whichever is smaller from these two, and we're gonna enter that here on C13. Okay, number 2. And now we just start playing around with the monthly revenue so that we are able to cover everything and take home our target of $10,000 a month. And so let's put here 20,000. And so in this configuration, if the company makes $20,000 a month, and we have allocated 30,000 to ourselves, that means that we're gonna take home 6,000. We don't get to $10,000 a month. Okay, it is more than enough to cover our. Actually, it's also not enough to cover expenses, because what happens here is that from one project we spend 3,000. We charge 7,000, and we spend 3,000 on the freelancer. So if we have 2 projects, that means we're gonna have $6,000 in expenses. We have fixed of 1,000, so our total expenses will be 7,000. So that means this is not enough. And this is the whole thing that people don't realize. They say, I want to make 10,000 a month, but they don't realize that they have a constraint in capacity. And so in this case, already you need to charge 11,000 a month to make from this 20,000. You don't take enough yet. And so here we have 2 choices. Either we lower how much we want to make a month, right? And so we bring this down here to 7,000. Okay, now it's 7,000. We're still not ready to cover that. And so we need to play with the revenue, or we need to play with the capacity that we have per month, or we need to play with these margins. Now, we have another constraint, and that is that if we have 2 projects a month, we're spending minimum 7,000 a month. So this needs to go higher. So let's see. We need to bring this higher to 35,000. But now, obviously, that's more than 100% here. So we need to bring this down. Our goal should never be to eliminate this. Remember, if the business has no profit, it doesn't make a reason for the business to exist. So you can bring this down to 1%, right? Because you're getting started. And then you can bring this up to 39%. And now we're at 5,100. You're still not getting to take home the 7,000 a month, right? And so 20,000 a month, it's not enough. Now, in that case, what we need to think about is, well, in this example, you charge 7. In here, you need to charge 11. That means that you're on completely underpriced, and there's no way that you're going to take that much home. So not only we need to increase our price, but more importantly, we need to increase our capacity, whether it is in capacity or it is in sales. So we need to be, pushing more sales. So let's say that we managed to increase this to 3 projects. Well, that's automatically going to increase our expenses because we're spending money on freelancers for every project we make. And so this is going to go up. And this is where you start seeing that actually at some point it makes sense just to have your in-house team, because you can then increase this to 5, but this is not going to increase exponentially, like linearly, as it is increasing right now with projects, because you have the 3 employees, you have fixed salaries, and then you can increase capacity considerably. Especially, another constraint is that if every project is different and everything is changing all the time, then it's really hard to calculate what this is going to be, and then you constantly work with a different freelancer, so you don't know exactly, and then it's really hard to have consistent sales because every client is different. You don't know how to create efficient marketing, messaging, and strategy. So, but in any case, let's say that that you have increased this, right? And you want to make 7,000 a month, right? Well, we're still not there. In this case, what we need to do is clearly we need to find a way to lower our variable, or simply bring this to 30K a month, right? And now we see that this is over the 7,000, so we can bring this down to 25. It's still over. We can bring this to 23. That's already losing, so we wouldn't get what we need. Then 24% would allow you to take this amount home. Now we have 95%, so which means we can increase this to 40%. We're still not there. This may be a hard pill to swallow, but without having this clarity, it's really hard that you can design systems and processes in order for your business to function. So let's go back and let's say that from the 7,000, you actually had 1,500 cost. Yeah. So you lower the cost that you have on freelancers. Now we start seeing that things start to click. So we need to cover is 8,500 a month. We can do that with 30. Yeah, for sure. We can do that. Now we can bring this up to 30 as well, right? And then we can bring this to 5%. Now, always keep in mind that your taxes, whatever it's going to be in the end, yeah, like how that works where you are. In this case, right, we have more than enough to cover the 7,000 a month that we want to earn. We have more than what we need to cover the monthly expenses, and we have allocated money for profit, and we have allocated money for the taxes. Yeah? And that means that when we make $30,000 a month, we get to make our income. When we have a capacity or sales capacity of 5 clients a month, then we get to charge 6,600 for projects. That's the minimum that we need to charge in order to be scalable, to be profitable, for this business to run the way that we have designed it currently. And so I hope that gives you clarity. What I would do here in this case, I would then calculate, whatever it is your sales tax, whatever you are, like in my case it's 20%. So that means this is what the client will pay in order for them, like that's what my invoice needs to say. 20% goes to the government, then the 6,600 comes here, and then I allocate this, and actually the business makes this much, and then this goes to my account. In total from all the projects. And so what I have here is a last example where then you can set this up, right, once, and then here you can use this tool to track yourself on an ongoing basis. So if you notice up here, those percentages are already automatically calculated, and this will go into these columns. And what this tool does is that it allows you to see if a project is profitable. It allows you to keep track of your pipeline and see where you need to focus on, and see if you're actually going to make the money that you need in order to get paid. Because what the rule says, if you go back to profit first, is that if this amount here is less than what you want to get paid, you don't get paid. The idea is that you force yourself to make that income. You don't borrow from the other buckets, because that's when you start getting in trouble. The other thing is that you build up the profit, and then every 3 months as a business owner, you pay yourself 50% of that as a bonus, and 50% goes into the savings account of the business so that you can start building, that cushion. And so let's say that you have a project, and this project, you don't have fixed pricing, so projects are changing. So this one is 7,000, and this one you're gonna have a cost of 1,200. That means that this is the break even. So this is under 30%, because that's what we see here. This is the break cost is 21%, and we need that to be 30% so that we can cover everything. So here it is. And so this is a profitable project because you have enough to cover your variable expenses, which is the freelancers and so on. This is what you have allocated, and you have 900 left to cover the office, to cover licenses, to cover those things. And this is what you need to allocate. I mean, this is a 20% VAT sales tax that is allocated. This you will need to fix here if it is different. So in this case, what that means is you sold a project for 7,000. Immediately when the money comes in, you allocate 350 to your profit account, 2,100 to your salary bucket, 2,450 to the taxes bucket, and 2,100 to the expenses bucket. Then we have another project, and let's say this one is 9,000, but then we have another project, and this one is 5,000, right? And so these expenses, maybe this one goes to 2,000, and then maybe this one actually, it looked like it was more, but you ended up spending more. So actually, you can see that this was not a profitable project, right? Because you spent 70% of that money on freelancers. So you actually lost $2,000 in this project. In this case, this project was also profitable. And what you do is you immediately allocate this, but you will see that so far in this month, let's say this is January, the company made 21,000, but you still don't have enough to pay yourself. If you look here in the bottom corner, you don't have enough to pay yourself your $7,000 a month salary. And so this tool allows you to see that and be like, hey, I will not be able to earn what I want this month. I need to push this a little bit more. One thing that is important is that if in 1 month, in this case, for example, you make 9,000 and you pay 7,000, it's not that you pay yourself that month 9,000. No, now you leave 2,000, that difference, you leave it in that bucket. And the idea is that you accumulate money in that bucket so that in case you earn less, you still have a consistent salary, you still have a consistent income. And that's how I was able at one point to guarantee myself 6 months of salary, because there was enough money in that bucket that I didn't need to worry about my income for the next 6 months. And same thing in the bucket of expenses. The way that you build them up is not only by having that difference between what you pay out and what goes in, but also every 3 months, whatever it is in the bucket of profit, 50% of that goes to the savings account. And then what you do is also you put that money into the savings account, and that way you're covered and you have peace of mind, and you don't need to take any client just because they're in front of you. You can focus on really going after the clients that you want, and you building the sales processes. Now, for example, if this was a productized signature offer, then that means that this will be all the same. And let's say that's 7,000, and then this, you have the overview. So you need to make 1,500 from every project, and then this gives you, it simplifies the business. It gives you a lot of clarity on how things will be. And so there you have it. I hope you found value. I'm curious to hear what your results are from this. Like, are you underpricing? Are you pricing over? Are you in the safety zone? Do you need to increase capacity? Do you need to increase sales? It's just too hard to calculate because every project is too different. I'm really curious, so feel free to write back and report. You can just send me a message on LinkedIn. And if you're curious about our program and actually streamlining this and simplifying everything and developing your signature offer, that is the thing that positions you in the market and attracts customers to you, lowers your costs, simplifies everything, simplifies your business, feel free to send me a message and I'm happy to talk to you a little bit more about that. Thank you so much for making it this far. If you found value of this, feel free to share it with other agency owners that may benefit from it. Cheers. All the best.